pick a side.
All right. So can everyone hear me fine at the back as well? Are we pumped? I'm pumped for this conversation. Richard is a difficult man to get a hold of, so.
What he's trying to say is that we are less than 100% rehearsed.
Yes, we are less than 100% rehearsed. In fact, last night, we got told that Elke unfortunately would not be able to make it due to her flight being delayed. So in New York, Elke is the UK country director for Coinbase. So it's going to be myself and Richard today. It's going to be a really interesting chat. So yeah, maybe I'll give 1 second of brief intro since I'm talking about myself later this afternoon. And then I'll allow Richard to maybe introduce himself and give a brief origin story of how Fabric came to be. So yeah, I'm Filippo. For those that don't know me, I'm the GP of Agile GTM. We're the world's first enterprise Web3 accelerator fund, and we're based out of Lisbon. Please, over to you.
Thank you. Is this working okay? Ish? Yeah, I can shout. So yeah, hi, I'm Richard, and I've got, no, that picture's not up there.
Yeah, it's not up there.
I've noticed that there's got a picture of me down here, and I should be wearing exactly the same clothes, but that wasn't intentional. So for what it's worth, I guess as context, well, first it's great to be here, great to have such a concentration of people who are passionate about this particular space and have made either are local, I guess, or have made the journey across to this side of town. I'm Okamura, have been a Southwest Londoner after my parents sort of brought me across from Australia. But as context for, I guess, Fabric and myself, given that now we're having this very personal chat for how long?
30 minutes.
30 minutes?
Yeah.
As I said, I kind of got transplanted here sort of early on by my parents, and then my dad was in the music business, and kind of that inspired me and my brothers to think of what the closest thing to rock and roll might be, given we were definitely not going to make it in terms of singing and playing any kind of instrument. And back in the 90s, that felt like it could be building startups. So I've been doing that. I've been in the kind of startup gig, game, pulling the band together, trying to be extraordinarily ambitious and build stuff and get venture backing since the mid 90s. The first company I did was in the whole kind of network management space or network middleware space. That's really boring, but it was interesting in that it was one of the very earliest companies to use open source software in anger at massive scale. And folks here, some of you might remember, and there's a thread to this because it's connected to the open movement and where we are with Web3. But some of you might remember that at that point in time, the concept that you might use open source software at all was a little crazy. And that was from Richard Stallman and his romantics. And it's a nice idea and everybody can contribute, but you don't really want to rely on it. What you need is kind of like precision engineering, waterfall from requirements down to kind of delivery and testing, like you're building like the space shuttle or something. And that was the way to do it, sort of in a military style. And so obviously this was the era where MySQL out of Sweden, in fact Finland, became very popular, and Linux and so forth. And it was inconceivable at that point in time that Linux would be ultimately at the heart of not just desktops around the world and laptops, but also mobiles, effectively all around the world at this point in time. And that anything could sort of threaten the kind of almost imperial hegemony of Microsoft that was on the rise with that fantastic Windows 95 launch scene that everybody has seen meme across the internet with Steve Ballmer shouting developers, developers, developers. But it did happen, and it was a triumph for the open approach, for the inclusiveness, the ability to get many, thousands or millions of eyes onto a problem, people's desire to participate and contribute to those projects. And I think one of the tenets of that whole open systems approach was that you're never going to be able to hire all of the most talented people who are relevant to your particular project in the world if you're running a company. It's just never going to happen. But there is a different approach to building things where you can invite them to contribute in their different ways in a kind of, obviously in a kind of long tail, or kind of, there are very core contributors and then it kind of tails after that. It's not equal participation, but it's important. So I think, so that was my experience in the 90s. We ended up IPOing that company actually at London Stock Exchange and then NASDAQ, and then merged with another NASDAQ company and got bought by Oracle. And it's still kicking around managing big data networks today. I then, and lots of lessons mainly about what not to do in that context, but please let's go for a beer or a martini or something I can tell you about that. And then I helped Accel Partners set up in Europe. And this was at the time when, the European and UK venture capital industry was absolutely in its infancy. There were barely any firms. There were a few sort of setting up. I remember one of the top firms notionally was 3i. I don't know if anybody's come across 3i. And it was a listed entity, but it kind of did venture and private equity. It was like just so many miles away from the high risk appetite and intensive support that you get with a kind of Silicon Valley style venture capital investing approach. And so Accel came across and Benchmark came across to set up in Europe, and I had a gig as what was called an entrepreneur in residence, which I was told I should never take such a pompous and laughable title, but it was a little bit like court jester, and a little strange actually, because and kind of, if I can link this forward to, we've got a program called Fabric X supporting people at the talent stage, which was kind of inspired by this support for people when they literally have nothing but a blank sheet of paper. Which I think is an important part of what we need to have in our, our ecosystem. But there's a kind of flip side. There's a double-edged sword, or even a poison chalice, to kind of not wanting to throw too many metaphors around, involved in being given a kind of a blank check and a blank sheet of paper. I remember asking the guys at Accel, which is like, okay, great, I'm here, and you're kind of paying me my stipend. What do I do? And they said, well, I don't know, you're the entrepreneur, you work out what to do. All we need at the end of it is a kind of billion-dollar company. I'm like, okay, fine. And it's a huge challenge, and that's part of, conjoining your kind of business model with venture, is that you are making that forced impact that $500 million is not enough. It needs to be billions and above. So I did that, and I built a second company, which was called Tideway, which was in the early in the kind of cloud middleware, cloud automation space. And in that sense, I sort of built something that was in Web 1 and something that was in Web 2. And we got to like 100 people and 20 million in revenue, and then hit the financial crisis and all sorts of disasters. And again, if you want me to witness me crying into my beer, we can go and have a beer, and we can talk through those lessons. And but that was interesting for a couple of reasons that connect to why I have fallen in, particularly into the Web3 ecosystem, which is that, again, we used open source software. We amalgamated them and used it to very rapidly build a product that, if we'd been building it from scratch, we'd never have been able to do, and benefit from the community that was making it robust. And we also, two other things I think that are interesting. We were trying to incent, and I was listening to the panel that was just finishing, we were trying to incentivize extremely talented people who were running large data centers to collaborate. And so, because the truth is that you often ended up with a situation where people who knew the secrets of how to run a data center actually would therefore just keep all those secrets to themselves, because it's just attached to a large check on an ongoing basis. That's what's known in the business or whatever as a local optimum, yeah? The reality is what you want is everybody sharing all that information so the whole thing can run better, and then hopefully people get rewarded for that. And I felt like I witnessed the challenges of driving that kind of coordination, and we experimented with lots of different things to make that possible, and actually experimented with how we would have machine learning effectively. It was very early, primitives of machine learning, trying to solve complex problems in terms of application configuration and change control within a data center, and marry that to an incentive structure for people sharing their knowledge bases and get out of this tribal mentality. And both of those kind of essentially created a sort of fertile ground for when I stumbled into, after selling the company in 2009, when I stumbled into kind of Bitcoin and then the concept of DAOs, for thinking about it and thinking, wow, like, first of all, Bitcoin is a DAO, and it's actually managing to achieve incredible things, coordinate people's effort and deployment of their capital on a global basis, and that principle can be extended further than that. And in 2013, I woke up to this superpower, and I'll stop so you can get me back on track. This superpower that I believe is at the core of Web3, which is this ability to coordinate at scale for the collective benefit, the actions of individuals in a way that actually sort of balances that collective benefit with the profit incentive and the power of capitalism. And so that in that sense, it's not just a technological movement, it's not just a business movement, it's actually a societal level movement ultimately that hopefully we're all kind of behind here. And so I saw those things coming together, and obviously, like all journeys, there's been many meanderings of different descriptions since then, but that was the genesis of thinking, wow, how do we participate in this community? And I made the switch from building. It took a while to admit that I was not as going to be the, the next great kind of builder and hang out my kind of boots, and switch to be the coach or whatever and be the backer for other builders, yeah.
All right, well, thanks a lot for that. That was amazing. So maybe picking up on some of the things that you said. So you said it's a socioeconomic almost paradigm. I'd phrase it like that. And it has had various ramifications, and it expressed itself in various ways from a conceptual level. So maybe let's start with the conceptual level. So last year, or 2 years ago, we basically saw the metaverse hyped, the NFTs being hyped, and the concept of utopian decentralization being hyped. And from an investment standpoint, it looks as if right now, I mean, I haven't been in the VC space for very long, but since I have been, I can already see the rebranding happening from metaverse to immersive experiences, from NFTs to digital tokens and digital assets and real world assets, and from coins to digital currency. So there's a rebranding happening, and so I'd like to hear your thoughts. You see thousands of decks, or not you specifically, but you see them after they've been filtered. What is the trend in terms of the rebranding, and because that is obviously, that informs what is going to happen in the future. So yeah.
Look, so it's an interesting one to unpack. So first of all, if you're using a term that you're attempting to rebrand that of course is also featuring in a legal document or in a kind of regulation, that's not necessarily going to help you. And I think it was touched upon in the previous panel, and I guess we can come back to it. But I guess suffice it to say, in that space, my experience is that we're still in the situation where people have such an abstract and possibly orthogonal view of different concepts in different sides of that discussion and debate that, it's both a massive problem because that stuff doesn't happen, but also sometimes things just slip through for that reason. So then in terms of the rebranding, I mean, I think a lot of people who have been around for these past few years have seen that, well, it's Bitcoin, oh no, it's not Bitcoin, it's going to be colored coins, oh, it's not that, it's kind of Ethereum, oh no, it's not Ethereum, it's about the blockchain, or, all of these different phases. And look, that's always going to happen. And I think sometimes if you're thinking about your startup, if you're a founder, I think it can be powerful. And we made some tweaks, for example, to our positioning. We've always been about a new computing paradigm, having gone through Web 1 and Web 2 and saw that was what was emerging. And fair credit to Gav Wood, who we hosted at a meetup to present the Ethereum paper in sort of Jan 2014. He coined the kind of Web 3 phrase, but in my mind it was always kind of Tim Berners-Lee who had his eye on that with the concept of the semantic web. But we've already viewed it through that lens, not as kind of we're going to invest in digital assets, or we're going to we're after NFTs. It's a stack that enables a whole range of different things that is continuing to mature. But at some point, for example, we actually switched a little bit from talking about strictly Web3 to talking about, or in fact, one point we talked about decentralized data networks. So it was not very snappy, and people, it might be literally true, but not that great. But to avoid the blockchain word to makes it too narrow. And I guess I'm sharing kind of my journey, and then anyone can reflect on it from their own position as a founder. And then we switched to kind of talk about Web3. But we had people sort of go like, well, this is earlier on, do people really know what that is? And if it's Web3, then maybe we'll wait and we'll invest in Web4, and numbers aren't really particularly evocative. They're a little bit sort of clinical and sterile. And so we settled a little bit on talking about the open web. And we developed so again, building on these principles of open systems and permissionlessness and open source and the open execution of code, and where we're moving to, open data that we're comfortable contributing to because it's privacy preserved, and actually moving beyond that to, in a sense, a concept of open truth, because we've got, consensus around it, as well as we can rely on the provenance of that data and so on and so forth. So that was the positioning we ended up with, and that's important. But I think, as with all products and their messaging, it's really critical, whether you're a technical product you're launching or a firm with its offering to founders in the service of founders, is to know what you're actually doing and know the difference between that and how you're articulating something to make that work. And I guess within that, what I'm trying to say is that don't let the tail wag the dog. Don't let people who just we're just a bit bored with NFTs and that's the wrong branding, whatever. Like, NFTs are a set of technologies. There's some standards, there's some more ones emerging. Don't throw that out with the bathwater. Embrace that. Then articulate what is the benefit of that technology. And that's a different thing. And then also critically, if you take one of the topics that we're kind of enthusiastic about, which is the kind of deplatforming of the concept of loyalty and payments and commerce in general. So it's actually your experience as a consumer when you go and buy stuff in that moment of payment, and what's in your basket, and what you might be interested in next, and all of that. That should be about you, and it should be about you and the communities you're part of. Not the retailer you happen to stumble into online or offline, not the brand you happen to be buying for. It should be about you. And that's the deplatforming that we see happening. And my point is, in that context, for example, it's not helpful, I don't think, to go to your average kind of person buying whatever, anything from a Starbucks to a ski outfit, and say, hey, great, now you've got NFTs relating to your head skis, and you've got an NFT relating to your latte or whatever. And don't you feel better about your experience? Thank you, Charlotte. And don't you feel better about your experience now? You want to talk about, it's just that good, marketing and good startup building. You want to talk about what the benefit is, and use just whatever is the simplest form of vocabulary for people to grok that, I think, and to adopt it and kind of build it with you.
Amazing, yeah. So many amazing points raised there. So maybe let's, we kind of started from a more conceptual level. Let's go a level deeper, and I will maybe attempt to slip in. I'll attempt to slip in a provocation there and say we haven't achieved product market fit yet in our space, and given that beyond of course our echo chamber, as we call it, but you have mentioned some things that have the potential to kind of break through, which are loyalty, payments, and of course customer experience. So given your investment thesis today, which vertical narratives or which vertical focus do you see kind of happening in the future, and maybe of course, please feel free to go as technical as you wish, but also keeping in mind that some of the audience might not be technical, so yeah.
And some, I'm sure, are much more technical than me. Maybe first a question. So how many folks in the audience are building something? Show of hands, great. How many are building infrastructure, let's call it that for the moment? Okay, about the third. How many are building something in the open or decentralized finance space? Okay, probably another third. How many people are building, well, by definition, okay, I guess roughly a third are building some other kind of application? Yeah, okay, We seem to have had a dropout from the original number, but anyway. And then, so how many are building something you might think of as a consumer app? You know, okay, yeah, good. This is kind of a little bit fresh, I think, in the space. So, thank you. Interesting to see, you know, what we've got. Actually, how many are terrible investors in the audience? How many people are investing? Can you leave now, please? And we can talk about that. Obviously, that's not really the space at all. It's a very kind of cooperative space with lots of party rounds, and we need more, not less investment. So apologies for the joke. But so the way we look at it is, as I said, the stack has been building up. And the stack, in a sense, you can think of as building this world computer, you know, and it's compute, it's storage, and it's the consensus around, you know, a data set, this database. And I think, even though, yes, I think we continue to be self-critical and challenge, you know, whether or not we've had product market fit, I think we have had a pretty strong product market fit around elements of that, be it, you know, Bitcoin, be it in the broader sense, be it Ethereum in its initial state and then its evolved proof of stake. You know, that is a monumental technical achievement. Where there are a lot of people, you know, there's fees being generated, there's a lot of people participating in that, you know, ecosystem. I think then we've suffered obviously a little bit in a sense, and this is an unavoidable sort of risk, that the world computer has occasionally got co-opted by the world casino, you know, in the form of open finance, decentralized finance. And look, we need those primitives. Again, the way we look at it, the stack has the primitives of a stable coin, the ability to kind of make and keep financial promises, you know, on a peer-to-peer basis, stable coins, decentralized, you know, exchanges, automated market makers. All of these are incredibly powerful components of this new stack that has, you know, value, you know, identity and value at its core. And so that's unavoidable. And look, because it's so ripe, it's so perfect for speculation, we're going to end up with these sort of flurries of casino activity, and therefore, you know, bad actors. Probably name a couple at this point in time, and obviously challenges with regulation. But so infrastructure continues apace. I think this whole evolution to a modular, you know, ecosystem, modular kind of blockchain stack, splitting out, you know, consensus and settlement and data availability and even kind of attention and smart contract composition. You know, all of this is happening at multiple layers. That is creating opportunity in the infrastructure play. I think it's unavoidable. I was just talking to some Ethereum researchers this morning. It's, you know, it's a fact that obviously the biggest community of developers is around Ethereum, you know, EVM and Solidity, and that they have the biggest, you know, economically, you know, based security for their chain, and that's really attractive to developers. But I think there's lots of ways that different chains are playing with to see how they can either coexist with that comfortably by having an totally alternative approach, or be intermeshed with it in a powerful way. And I do still subscribe to the view that there will be many pieces of that modular, you know, blockchain ecosystem, and therefore there's opportunity to build those infrastructure pieces, and all of that will be collectively delivering a much better experience for developers. And on the open finance DeFi space, I mean, like, you know, whatever, I think that the stat is that Uniswap did more business than Coinbase last year, or in the last, you know, year. I can't remember the exact time period. I think that, you know, we will continue to see those, you know, metronomically deliver mostly on what they're doing, you know, especially in contrast to the corruptibility of a centralized finance approach, both ones in our space and even ones outside of our space. And I think, you know, the innovation in that space is going to be critical. And I still would stick by my breathless assertion back in January 2018 that the crypto capital markets will ultimately consume today's capital markets, because they're just intrinsically superior. Not overnight, but you know, in time. And so we should be looking to that, the effort to get quote unquote existing real world assets tokenized and linked into those markets. So that's a whole bunch of opportunity. And then I was glad to see people building these consumer apps. And I think we're definitely seeing now, and a small ad for one of our investments, and where I'm on the council near Foundation, we're seeing apps like Cosmos and Sweatcoin and PlayAmber and others coming of the pipe doing really significant MAUs and DAUs, and that there are chains out there now, and others that are scalable to the point that you can have sophisticated user interaction in the UI and around NFTs and value transfer and payments and whatever, to the level required or expected, and that's a totally reasonable expectation by consumers who've been trained on Web2 apps. For a long time, there's been this kind of notion that we're waiting for the white knight of somebody who knows how to build a great UI or just to do, in order to have the UX we need within Web3. I think that the secret has been, and this is good news from where we stand now, that a lot of the underlying components have just not been there. Like just raw scalability, but other things like account abstraction, if people are familiar with that in Ethereum, that happen to already be in there. Those underlying sort of infrastructural components make it possible to build a user experience that is actually going to work and allow us to sort of get the proverbial next billion on chain. And so I think there's real possibility, whether it's kind of proof of physical work or involvement with that payments and loyalty, whatever, in the retail environment, to build consumer apps, and that's what we're very excited about. I'll mention two more spaces. One where we've tried and we're trying again, and the kind of failures have not necessarily been to do with the space so far, but just the intrinsic challenges of super early stage startups. And then one where we continue to look, but I hope it's going to get there. And the first one is open, what we call kind of open work. The whole question, the whole notion of how do we embrace the kind of primacy and the like incredible and unfathomable potential of an individual from the nursery through to the nursing home. How do you represent yourself? How do you train yourself? How do you educate yourself? How do you build up your CV? How do you work out within which different tribes and communities you want to work and earn your living? How does that intermesh with the possible concept of a universal basic income, kind of a sort of a data premium of some description, or data dividend? And so that notion of being able to kind of, in another sense, kind of reinvent LinkedIn in a totally different sort of paradigm and mindset, have there be multiple different kind of deep, job markets where you can connect yourself with them and like get picked up for what it is that you want to do at that part of your life at that time, and how you can be flexibly detached from, forget the gig economy, but a totally new type of open economy from the restrictions of payroll and how tax works today and pensions and all of those things, and reinvent that. I think that's a fascinating space, and we're just made invested in Only Dust, which is in that space, and previously back in Missouri, and we've been looking a lot. And then the final one, you can always interrupt me when I'm talking too much.
All good.
But
I have one more question that is all good.
The final one is, not the final on our list, but the other one I mentioned is what you might call open health or decentralized science, which obviously that intersects with, where we are literally, we're not dealing with a better approach to loyalty or let's take the banking middlemen out of the financial system and create more inclusion, which is super important, but we're dealing with life and death. And so the outcome is clear, and the benefit is clear, but the challenges are rife. But the people are attempting to say, if you look at the whole life cycle of healthcare, from just researching into the population as to what the issues are and gathering that data and then running clinical trials on possible solutions, and prioritizing our actions there, and then bring them to market and testing them and then closing the loop on that, and so forth. How to do that in a way that is way better scale than it is currently. And I don't have the exact numbers at hand, but you can get into the difference between the efficacy of certain algorithms, especially now as we're training large models, with a sort of a data set of 100 data points every month versus having 1 million data points every week, to apply to anything from radiology for in a context of oncology through to spotting mental illness in advance, and don't want to bring up necessarily Rishi's sort of whole anti-smoking push, and I don't know how controversial that isn't, but the principle of trying to kind of get into prevention and not cure by getting ahead of those problems is just, again, irrefutable in terms of the health and economic sense that makes for us. And so I think there is huge potential to do that with the token-driven incentive mechanisms and the community and the data and the privacy preservation that we can have in our Web3 space. But the challenges obviously are massively regulated, massively balkanized, massive, entrenched interests who even probably if they want to do it, can't get it out of their own way. And so it's going to take time, but I'm still super excited about what we can do in that area. Amazing.
Yeah, I think you touched upon specific verticals and narratives, and it's really amazing. I think the healthcare, of course, is really strong use case, as well as B2B2C almost, so the consumer coming in from that side. So that's amazing. Perhaps I'd like to go one level further into, or one level deeper, which is saying, at the beginning of your basically your answer, you said that, what has been happening is that the investment space has been approaching it from a speculative standpoint. We see that happen, and a lot of layer ones are arguably, potentially not gonna survive the next couple of years, and we see founders kind of go from a token kind of raise to an equity raise. So from that standpoint, I'd love to hear your thoughts on how you see that. If you see that. From founders, founders kind of changing their narrative and saying, okay, now we understand that VCs want sustainable business models. They don't necessarily want the speculative token raise. They want to actually go into the equity side. And the second thing is, in relation to that, is how do you think return cycles will change? Because we've seen that every 4 years cyclically there's a bull run, and we all live in hope that the venture capital space will eventually catch on with the bull run, and we know that there's two more halving dates coming, and that's kind of the two more of those cyclical things happening. So how do you see the return cycles for VCs change in light of that?
Okay, so if you think so, good question, and obviously interesting one for people. So obviously there's multiple threads that come into that question when the next bull run is going to go. Whether it be kind of what is the narrative, what's happening with the interest rate cycle and the macro picture, we risk on and risk off, what's happening with the halving, have there been any scandals? And so that makes it impossible, obviously, to call always, and perhaps a fool's errand. Having said that, I will give you a precise date. It's November the 28th, 2024. Just make sure you're on board and you kind of get your bags full by then. This is not financial advice, but I guarantee you that that's the date. I mean, look, joking aside, you always have in your back of your mind a kind of a notion of when it might turn, and that, for what it's worth, that's kind of notionally in my head where I feel like I'm, the work that you need to do when the nights are long and you're kind of doing your winter training and consolidating, I want to get done within Fabric and within our firm's portfolio in that time frame. So that's, I guess, the first thing, the kind of free non-financial advice. But on the other points, I think maybe it's interesting to connect it to, we were talking about different sectors a little bit that are exciting next time around. The other way we think about some of the opportunities are, what are the fundamental innovations that are either happened or happening or about to happen, around which new opportunities kind of naturally coalesce, and those just technical disruptions. I, for one, when I was building companies, was always got reminded when you got to the competitive point of winning a deal, be it a kind of freemium and sort of, $500 upsell or a 10 million deal, you need like a secret sauce. What is your technical edge that has given you an advantage over somebody else, and have you articulated it cleanly? And so anybody who's looking to start something, I really urge you to think about what are you utilizing that gives you that edge. It's the best I can do in terms of broad advice. And the three areas, we've mentioned one of them already. I think that the stack is reaching kind of, a point of fruition, a point of scalability, the open Web3 stack. I think that's an interesting thing to jump onto around account abstraction, around general, using layer 2s or whatever. That's creating opportunity. Another area that is, well, both of these other two areas still have debates around them. They are basically the whole area of ZK, zero knowledge proofs, and particularly the intersection with machine learning and in artificial intelligence. I think that is a big wind in the sails for the space. And then the further areas is token economics. And so quickly on the ZK side, I think incentivizing people to give up their data, preserving their privacy whilst doing it, ensuring that you actually have integrity of the data set that's gone into the models, that you actually have authenticity of the model that is being used, that you actually can authenticate the inference that's come out of that model, and that you have a form of governance that is not, Sam Altman or even a few corporations, but actually makes you feel comfortable at with the social consensus that has risen around a particular AI provider. Those are very interesting intersections of the Web3 space with AI, the way I would describe it, which for me falls within the open web. Happening now, still research level topics and other stuff making really many orders of magnitude progress in terms of their efficiency and speed and so forth, that are ripe for people to jump on and to build stuff around. And then finally, on your point about token economics and
equity,
not looking at sort of for pump and dump opportunities. So I'll say this, our approach has always been the same. We look at this wave of technical innovation, and we're looking for the founders that are most kind of, consistently relentless and daring and in what they're building, and talented, obviously. And we want to be aligned with them. And we want to be aligned with them in terms of, our interest and to build something. We know that our returns come from the outliers, but also our reputation is built or dashed upon whether or not we looked after founders when things don't go so well. And I've had absolutely my fair share of both of those. And so it's something we believe very strongly. And the reason I say that is because economically then, we just want to be aligned on the equity, we want to be aligned on whatever tokens, and that's how we view it. So we'd prefer to be in the equity of whatever the firm is, and then in whatever tokens come out, so we can be riding shotgun or shoulder to shoulder with the founders on that journey. And I guess the final thing I'll say is that some people have started to question, can we make token economics work or whatever. I still feel that it has worked incredibly powerfully on the kind of layer 1 level. We see it work even before it's sort of manifested in things like Uniswap. It's not trivial to make a full reality, and we continue to need to do the experiments on distributing the fees and delivering governance and so forth. But I believe tokens really are in a sense more a part of the product in our space than they are a part of a financial instrument. They just happen to be conjoined. And so if that's another way of looking at baking in true utility to tokens, and that's what we deliver on with new projects, then I think the value will come out of the value accrual will come, the network effects, the flywheel that we get around the community will come, and we're happy to be patient through those experiments and through the time it takes for that to play out. We're not in the pump or dump game for sure.
Amazing. Well, I think there's a lot of food for thought there in terms of high value commercial knowledge and also macro technical knowledge. So thank you very much for that. We have managed to go through the conversation we only mentioned artificial intelligence and utility at the end, so we're really proud of that. And let's give Richard a round of applause. Thank you very much for your insights. It's been amazing.